Tuesday, and we're here with another session of Chart the Markets. And I want to thank all of you for showing up today. We're doing these from our Telegram group, and if you were looking to join us live, you're more than welcome to do that. A link to our Telegram is in the Twitter post or X post rather, that you would have seen today, and you can feel free to join us. There's no cost to you, and you can spend more time with us in there talking about charts as well if that's what you're into. One of the things that happens when price pulls back is that ultimately it creates opportunities. And as technicians, I guess to some degree we are opportunists. And what you're looking at right now is the daily trend spider chart for Solana. And today I'm going to be using the trend spider charts a little bit more because I have been able to get the script that we typically see on our TradingView charts to work on trend spider as well, and I am giving it a bit of a run before I publish it and make it available. But I am very happy to have to have this done. And what you're seeing in front of you, quite simply, is a lot of opportunity. This volume gap was created back here, right? As price moves up and down quickly, it will create volume gaps on your chart that will become meaningful to you a little bit later on. This is a little bit later on. You get a very clear buy signal on the Solana chart way back on the 31st of December. When everybody else is pre-drinking, you're buying a low. And that's, exactly what we want to be doing, right? We want to be monetizing the chart as best we can, and finding good entries is all part of that. And when you were looking at this, leading up to that, this volume profile tells us a lot. If we were to take that signal, we would use the lower value range as a potential target because it's one of those places that price has been before with some consistency, thus drawn to those places again. But when you see these volume gaps, that's where the real reward kicks in. If you can break above that lower volume range and get into that gap, well, what do we see back here as a target? And again, we're just using the base of our script, and what you see up here are anchored VWAPs for volume and price. That's all we have on the chart. Here's your VWAP and here's your point of control. Both of those are strong draws for price. And that said, knowing that you can cut through this gap to the upside, that creates opportunity, or that is your opportunity. So all of this big pullback that we saw eventually does create opportunity for the trader. And I think that's what you're seeing on this particular Solana chart. Thing based out, a real clear buy signal, and then we get that divergence between the T line and the 5 EMA that we talk about. That tells us that we're okay to stay in the trade. And that's what we're doing. If we want to get an idea of what might be around the corner, we just switch to the 4-hour. Still bullish. Starting to feel like, it's a little extended, and it might want to come back to the 5 EMA or the T line, and that's appropriate. And then you have the support of the upper value range. What's the risk on the chart? That big gap to the downside. And that will tell us a bit of a story. What is the POC here at 124.2? It's 124.2. So if it was to pull back to those levels that we saw on the 4-hour, it's way back here. That big gap at the bottom is way back here. What we want is this. Now, do you feel more or less comfortable having the ability to follow trend? I hope more. So that when you see, in the case of a move higher, red candles like this, you don't get freaked out and close the trade too soon. And the next day look at the chart and go, oh, darn it, shoulda, coulda, woulda. This is going to help you take the shoulda, coulda, woulda right out of the equation as often as humanly possible. And when you see a candle like this that showed some resistance at that would be the lower value range, and then the next candle basically eats that wick and the trend is still held, that's probably bullish. Right? I really do believe that if you can break this kind of structural break here, and we're going to see this on a lot of charts, you'll get into that gap to the upside. And it's all we are doing is just listening to what the market is telling us. That's it. Like, I don't want to make this any more complicated than it really needs to be. We do that all on our own in life. What we're trying to do is create a simple, reliable, risk mitigated tool to help you gain confidence to become successful. That confidence goes a long way, right? What kicks us in the teeth is our little failures that we try really hard to overcome. We lost in a few trades, now we're trying to make it up. Then we do stupid things, and before you know it, you feel real bad. And that's the market's uncanny way of making us pay. Right? Well, we don't want to pay too much if we can avoid it. And what we're giving you is just a simple tool that you can use. Obviously, what's this? Chop? We don't want to trade that. We're looking for the breakouts and the breakdowns. Are there some tradable moves in here? Sure. But what you really want are the breakdowns and the breakouts. And we give you the ability not only to read price, but to read the trend. Because if you were to sell this candle and walk away, knowing full well that the trend was intact, well, that's on you. Nobody else. Especially knowing that the upside is this gap. And one of the reasons that I love TrendSpider so much is because of these anchored VWAPs. For some reason they just work really, really, really well. Well enough for me to maintain my subscription forever. Right? That's how much I trust them. And in this case, I want to point out that they're very, very, very close together. Quite often you'll see one high and one low, and there's a process to get to them. These guys are hanging out right at the same level. That will be a draw for price. Now, if you're looking at this daily chart, don't think the move is over, right? And I think that happens to a lot of you, from what I understand, is that you look at a chart, you're a little late, and you're discouraged and you walk away without really taking a good look at the chart. And what you should be looking for is maybe a back test or a rejection at a certain level, and you're monitoring the trend and you know that the trend is still good. So you're really just looking for an opportunity like this in here to get back in and then monetize the rest of it. Don't be too eager to get back in. Just wait for the right time. And don't get discouraged if you think you missed it, because this move probably isn't over, right? And if it was to pull back, what would we look for? Like instinctively, and now I'm going to start to add a few things to the chart. There's the 20. Whoops. And there's the 50. Do you think the two of them hanging out together, if there was a pullback, would be a reasonable area as a back test to find some support? Probably. So I think your downside risk here is literally that level. Any break below that, and it's a whole other story. But I mean, any kind of back test to here, I would look at that as perhaps an opportunity to buy if you get the support you're looking for. It might struggle with the POC here for a little bit. Come back, bounce. at these two levels of support, and that might be enough to springboard it above the POC and into the gap, or the lower value range rather, and into the gap. Now, we're not trying to predict the future. I'm just trying to lay out the up, down, and sideways possibilities. But on this chart, this gap, or this the support level, looks really, really, really strong. And you'll notice that it's kind of aligned with this extension of the volume profile. What is this? This is volume, right? This is the kind of stuff that gives you the support, whereas this does not. So you break through here into this gap for a lot of reasons. I like Solana. I like the look of this chart, at the very least. And if you guys have questions, don't hesitate to shout them out. There's your 4 hour again. These red candles can be scary, but what's important is that we hold, you hold trend. If you're ahead of the trade and you can afford to wait to make sure that it does hold and this is a continuation, then you've got all you need right here. Do want to stay out of the gap to the downside. So this is the kind of thing where you get opportunity from these pullbacks that have happened in the past. That is why you do this. This is your opportunity to monetize the chart. And, for me personally, this is something that I pay particular attention to and really like trading in and out of those. So that's Solana. But of course, everybody wants to look at Bitcoin. And here we are on Bitcoin's daily chart. We have down here, this is the anchored VWAP for volume, anchored VWAP for price, 50-day moving average, 20-day moving average. What we really want to find a way through is this. That is, remember the 500-day, that we kept hitting our head on repeatedly and failing, right? So this is a very good illustration of, and we talked about this when this recovery began, or this sideways stuff began. You will be very frustrated and annoyed with the amount of time it takes to get the recovery you're looking for. Not everything is V-shaped, where it comes to a point at the bottom and then bounces, and before you know it, you even forget the pullback even happened. Right? This is not one of those times. You can see it struggling with these major moving averages. Here's the 500. We're going to challenge that again. This is more positive, right? Because you've broken up through the 20 and the 50 in here. Looking for the 500 to try it again. And this is a simple matter of, test and fail, test and fail, test and fail all over again. This is going to be one of those test and fail areas. The upside of this is, or the positive, if you can break it, it does get you into that gap, right? And this is the gap. These gaps is where the price can shoot up and down really quick. That's why I like them. And I have a target of the anchored VWAP for price, and this white line we know is the VWAP, and that's the point of control. So we have lots of upside opportunity. And just out of curiosity, where's the 200? Right at the VWAP. So we know that current price looks for past price when it's trending. So if price is trending, it's going to be drawn to obviously the VWAP and the 200. So that makes that very, very much realistic. It certainly makes that realistic. So you can start to feel a little bit better about what we're seeing on the chart. All of this can change in a candle, I get it. That's why we look at the 4 hour. And, the 4 hours showing us what's our resistance. This is 500 days on the 4 hour chart. That's our resistance right now to the upside. If this does break down, do you not believe that the upper value range, the 50-day moving average, the 20-day moving average, and the two anchored VWAPs being within a nickel of one another is a significant draw for price? Yes, it is. And perhaps on the 4 hour, this might be our back test. Wait and see what happens here. They're still bullish, right? Still above the T line, still above the 5 EMA. A little bit airy in here, and that likes to get filled. So that's why we're watching these levels, and that's what we want to make sure is our bottom. But if it bounces, it'd be interesting to see what happens up here. But that's the upside potential, and then of course there's 1,000 on that time frame as well. And these are just creating the trading ranges that you need to be able to set targets, stop losses, all of that fun stuff. That once you talk to people, they're like, "Oh man, you know what? I never really got an opportunity to set an exit, and it kind of blew past the level I was looking at, and then retraced, and then, I just round tripped the whole thing." You don't have to do that. Just take 5 seconds, look at the chart before you enter the trade. Look where the opportunity is. All of this pullback previously, all this big capitulation really created this big gap. That's your opportunity. Don't be afraid to set an exit somewhere up there. And where would you set a stop? Well, certainly no lower than here. That area that's got all your support. But, geez, if you get an opportunity to lock something in profit, then you're already ahead of the game. And when did you get your signal? January 1st. 31st on Solana, January 1st on Bitcoin. And would your trade be protected if you entered back here just following the script? Yeah. Entering on this wouldn't even be an issue to think about because you're way down here. Good entries are really key. Support level, yes, but that's your entry. So as eager as the people buying up around here are to get into this gap, worrying about, failing again up here, you can relax because you're in at a good level. And it's a heck of a lot stressful when you have a good entry, when you have to make a decision. Because it puts you, in the driver's seat. And that's what we want to be able to do, is put you in the driver's seat. Now, let's look at another stock. This is a stock. This is United Healthcare. What do you believe is happening on this chart? Perhaps this is the first touch of the 200-day moving average, and first touches typically fail. They have a higher probability of failure. But was it just the 200 that we were failing here? No. There's an upper value range on the volume profile that it wicked and ran away from, which I think is really interesting. So, this kind of looks like the chart we just looked at, right? The Bitcoin chart. Here you have something rolling over. Is it going to find support in here, or are we going to trigger a signal on the daily? And what would be the draw for price? This is the VWAP. This is the point of control, which is the most concentrated area of your volume. Certainly the 50, if you break the 20, we know how that works, right? Break one level, find the next. So if you break the 20, very likely find the 50. And all these things are here as draws to the downside. But because we're trying to find safe, profitable entries, and we're just using kind of the daily chart as our primary chart, I'm assessing that daily chart, knowing that I want to enter long or short, but I'm really looking at the 4-hour chart to see if I can get a bit of a head start, right? Again, trying to find that slightly better entry that will allow me to de-stress while everybody else might be stressing out. That's all. So 4-hour chart, when did this come? January 12th. And That's what, Thursday? No, Friday. And here we are, price is breaking down on the 4 hour. Breaks down on the 4 hour means it's going to fail this level in here on the daily, putting us this in play and putting this in play. This is a very good illustration of what happens at first touches of major moving averages. They have a much higher probability of failing. And now we've showed it on crypto, we've showed it on commodities, now we're showing it on a stock. Right? What's our weekly chart rather look like? Well, here's our volume profile. And what's this? This big gap was created by this big capitulation. And at no time, once you got the signal on this massive weekly candle, which you could have entered God knows where in here, but pay attention to what the trend was telling us. Right? Points and flats indicate changes in direction. Well, you have this big impulse down. You have absolutely no challenge at all to break higher. And what happens? You go sideways at the point of control. You barely wick the T-line and you pull back. All of this divergence, if you didn't know what to do in here, the market was telling you that you were safe to stay short. Bounce right off the lower value range. There's your safe entry. We could have, again, you can just look back to find an earlier entry. Sometimes they're there. Where do you find resistance? That is the anchored VWAP for price. Kind of illustrating again why I really like this tool. Price just can't break through. Rejection. Here you go all over again. And here's your 500 MA, by the way, on the weekly chart. So this is a significant level of resistance right now. And this, current weekly candle isn't looking exactly rosy. So don't always think that you're going to break in or out of these zones, right? This is yet to prove itself. This might have to come back, recheck, and try again. We show it all the time. But this 500 days, we know, on an extended time frame, is a heck of a lot of resistance. And this candle's getting heavier as we talk, so maybe I shouldn't look at it anymore. Let's look at Apple, because Apple, here we have 4 green candles. And what's on the chart? Upper value range, lower value range, point of control. The white line is the VWAP. 200 day, there's your anchored VWAP for price. 500 day MA. And then there's your anchored VWAP for volume. When did we get the sell signal on Apple? Way back here on the, 10th of December. So on the daily chart, you could have shorted this. But when did everybody start getting freaked out? Probably back here, when they're talking about it anyways, right? When you fail the 50 and you can see the wick of the 20 that fails. These 4 green candles that I'm really trying to illustrate are 4 green candles currently in a downtrend. So they haven't sold me on any sort of a recovery yet. And what I find interesting is that they seem to wick the 5 EMA and pull back. Right? So we know that as long as you're trading with divergence downward below these levels, it's bearish. And these are often the candles that convince us to go long, and then we end up making a mistake. We've talked about this before, and we've shown it before. And here's your 4-hour chart. We still don't have a confirmation upwards on the 4-hour. So if I don't have a confirmation on the 4-hour to go long, am I going to go long on the daily? Probably not. And this is why we use fractal analysis, right? So we don't trip and stumble over ourselves on the way to where we want to go. So if I don't have confirmation that to the upside on the 4 hour, probably not going to see me doing it on the daily. Right? Maybe it's telling us that these just might finish off as 4 green candles in a downtrend. And then we start to come back and test these levels again, where the upper value range is. And you can see that's a slippery slope here, right? If we fail this level, if there is a pullback and this isn't able to break through and change trend, there's your 200 and that other anchored VWAP. You can see the upside obviously here, but it's considerable downside risk, because we know that the 200, the VWAP, and all that stuff, point of control, they're all draws for price. Right. Understanding the up, down, and sideways risks and possibilities and being objective will certainly help you, I believe, as you go through this journey. Again, we don't have to overcomplicate these things. We're tempted to do that all the time, but it's not necessary. It really isn't. I want to look at Bitcoin's weekly. I'm going to switch to another chart here. This is exactly what we're talking about. So, this is the support along the 100 MA that we've spoken about for several sessions now. Here's the upper value range on the volume profile. There was our sell signal. We are still under this kind of sell signal scenario. But we can see that we're starting to fishhook. And if this move on the weekly chart does take off, there's your target. It may or may not trigger trend change, but it's certainly a target. So kind of keep an eye on this. That kind of puts us in this neighborhood up here, at least as a test. This is going to be really interesting, because if it doesn't break through this time on the 500, I would expect a significant failure. That's far too many tests without breaking through. And I'm afraid that if you fail this time, you're going to get a hard rejection. Breakthrough, obviously the upside opportunity and the targets are clear to see. But I don't have a good feeling if we fail there, and I don't want to make it sound spooky, but I don't like it if we fail that again, because that's just too many times to go look for flowers and chocolate to try and break through. This is gold's daily chart. Let's look at the weekly to take a little bit of noise out of here. So you remember a little while back, it was the end of the world. Gold was going to die. Roll over, all that stuff. Nope. This is why you want to learn technicals. So you can check for yourself. And hopefully you want to be able to think for yourself. Don't let other people think for you. Think for yourself. And I bring up gold because when people start wanting to convince you to unload your gold holdings, if you have any, man, they can be pretty convincing, right? Like, there's a lot of passion there, a lot of conviction. You'd almost think they know something you don't know. Well, they don't. The only thing that matters is price on a chart and how it behaves when it gets to support and resistance levels. What direction is the trend in? That's the important stuff. 2 weeks of doomsday talk got them where? Nowhere. Because what did price do? Price just came back to the T-line, folks, and took out the previous wave's high, like we show you every single freaking week. It's not what people say, it's what money does that matters. And I understand that the world we live in is one big information tornado. And depending what tornado you're in, it can be really helpful or not. But you can filter through all of that noise, because that's what it is, when you learn how to read price on a chart and how to learn when trend is intact so that you can monetize the chart. The noise is not the chart. The noise is everything off of the chart. You just have to make the chart make sense. That's all. Right? And I know sometimes we have a lot going on the chart and we're trying to illustrate things and it might look like a lot, but we know it's really easy to strip this stuff out, right? So don't worry about what people say. It's what money does. This is the silver chart, a weekly chart. And for the longest time, price was kind of reasonably range bound in that, low to mid to high 30s. And then all of a sudden one week you get this big red candle down. And lo and behold, the next weekly candle prints a buy signal. Now, do I know the reason why the week before it sold off? Nope, and I don't care. I don't care. If my objective is only to take long trades, and I'm blocking out the noise and I'm going to let the market tell me what to do, because you have the understanding of what it's telling you, I'm just going to take these long trades. Have your stop set, and if you get checked out, you get checked out. But if you bought this candle because you're just blocking out the noise and being objective and just listening to what the chart tells you, you're seeing this green candle at the 50. Two equal bottoms. How many times have we talked about that? Impulse down and then the next candle has an equal bottom, starts moving in the other direction. Well, this one did. And again, we don't know why that candle was red. Is all we know. We're looking to make longs. We get a signal. And the market did not tell us at any time, at least yet, that we had anything to be concerned about. It helped us manage all of this volatility and indecision that we experience on a daily, weekly basis. The things that make it difficult to make decisions when you're trying to trade. And sometimes the method that you're using of trading might also be complicated. Right? Like if you're trading options, there's an element of complicity to that. That combined with trying to figure out what's going on the chart can cause a lot of mania. But if you know what price is telling you and you know what the trend is telling you, that makes your decision-making process a lot easier and less stressful. Is all I know is that this chart has stayed bullish and still is. Obviously, this is a hot candle. Would we be surprised if it came back to these levels? Probably not. If it got support at the bottom of these candles along the T-line, would we be okay with that? Probably. As long as this divergence was holding and we weren't showing sell signals or, a massive red candle down. But it gives you the ability to manage the trade with some assurance or some reliability anyways of that you're on the right side and the trend is still in the direction that you want it to go. So when someone says to me, what do I think of silver? Well, I think silver's a bullish chart. I think if you wouldn't want to see it break that T line. I wouldn't be surprised if it pulled back and found the 5 EMA or the tops of those candles. The downside risk is that gap. There's the POC and the lower value range. 20-day moving average. Like this is parabolic, right? So we know what happens when we come back and we look at those averages again, because those are our ranges, right? They're representations of past price, where money's been before. So this kind of rainbow effect, eventually, like I said, we will come back and start to check it. But right now, you have to trade what's in front of you. And you can't conflict what you think with what the job is on the chart, which is to trade what's in front of you, which is a bullish chart. So should you still be long here? Yeah, probably, based on what the chart says. And if you're concerned about what might happen next, remember just to drop that time frame down. In this case, we're working off the daily as a primary. Just drop it to the 4 hour. And again, there's the downside risk on this time frame. What's this up here? The upper value range. And these ranges on the volume profile are dynamic, so they will change with time and price. The longer time frames will be less noticeable. The 5 minute, you might even see it move. But this is a range, right? Because we like to track and trap price. Well, this potentially is, a higher level, and, maybe there's a trade there to come back and test the lower levels. That's all. And it's just rinse and repeat. Don't fight the trend. If you're on the wrong side, let's go to the daily because I'm sure it's going to be really clear. If you're on the wrong side of anything like this, just don't fight it. Don't let your ego get in the way. If you are short in here, it's not going to work out. I'm sorry. And the chart is telling you that it's not going to work out. This is one of the easiest ways to tell if you're on the right or wrong side. Right side of the trade, being short's not very helpful, and here at all, you're dead. The other side of that is, on the short side, being long in here is not at all helpful. And this applies to any time frame that you're trading. And don't take this lightly, by the way. If anything today, take this as the most serious takeaway from today's session, that if you're on the wrong side of this stuff, just get out. Do not hang on and wait. Like maybe you're going to try and wait to see if you can get back to the 5 EMA and then exit or something. Okay, but I mean, don't hang around here and think it's going to change. When this is what you're looking at, one candle at a time, if that's what you're looking at, there is no escape. Okay? So don't get on the wrong side if you can help it. And if you do, exit as quickly as possible because you can see that it's a losing battle. And I wish, years ago I would have understood this better because I wouldn't have hung around as much as I did, thinking that, there's that reversal that I'm looking for. No. That reversal that you're waiting for that never happens, well, this is why. So pay attention to that stuff. Don't take it lightly. And you can apply it to any time frame that you're on. If we look at Monero, I have no idea. Just bear with me. There we go. So again, if your modus operandi is to take long trades, I'm just using this as an example. How do people know when to get in on a trade? There's some people that just instinctively are always in the right place at the right time. A lot of that comes with experience. Trial and error, learn by doing, and all that fun stuff. And a lot of it comes by just doing what the market tells you to do, right? In this case, we get support from the 50, and then this little candle shows up. Not even a very bullish candle for that matter, with a buy signal. But if you were to take that candle, again, not knowing, like if the following day you probably think you made a mistake, in all honesty, right? You probably would think that, and I totally get it. But the market's saying, no, you know what, just a little back test, just relax. Next day you feel better, and then all of a sudden price takes off. As unimpressive as that little candle was, Look what it's produced. Now, is it a little hot? Is there a little air there that's going to want to get filled in? Yeah, probably. But at the end of the day, we just do what we're told. Just do what you're told. This is the 8th. Let's back it up to the 4-hour. It actually showed up later, ironically. So there's your signal. Best one would have been the daily. But I don't think you're complaining, whether you took this candle, or even this candle. As long as this divergence is here, price wants to move higher. Is this all light trading? Yes. A little bit extended? Yes. We know where it might want to come back and test. We understand all that. And because we do, it makes the process of making decisions that much easier. So there's no reason at this point, unless you're profit taking, to exit. And if you look at the weekly, that's crazy. And way back here, again on the weekly chart, that's September. That's a buy signal on a weekly chart that came in September. So I know there's a few of you in our Telegram group, and we talk all the time. Try and find a way to get off those shorter time frames. I know they feel like they pay more quickly sometimes. I get all that. But this is a great illustration of what I'm talking about. You buy that monthly signal and you're still in the trade. These are just red candles in downtrends. This trend never cracked. And that's a win for you. It's kind of like that monthly Bitcoin signal came, I think, in April of 23, and it was only last month that it gave you a sell signal. And all the daily drama that gets us all psyched out was really meaningless. This is a great example of that too. So spend some time on the weekly charts, especially now, because we've had decades or a decade and a half of basically just price go up. So now you've got an opportunity to look for places where price might go on the way down. And I want to look at oil. I'm going to use this particular chart today because I can use a volume profile. Well, we finally see, this is a significant move higher. We've had them before, but this one kind of feels a little bit different. I'm not sure why. I can't quite put my finger on it yet, but we're getting close, and it doesn't really matter. At the end of the day, there is your buy signal, and price has gone higher. Broke the 50, broke the 100. Can you see why it might want to find the point of control and the 200 MA? Yeah, makes perfect sense. So there's, a little bit of an upswing in oil, and I want to look at the weekly because you want to know what the targets are on the weekly. There's your 50. It has had a bit of an allergy to the 50 in the past, so we'll see what happens when we get there. Also, there's your 500 MA again on the weekly chart. And let's remember that actually is decades of time, of compressed time. So if price breaks through decades of compressed time, is that bullish or bearish? That would be quite bullish, I would think, right? When you break through decades of compressed resistance levels, yeah, that would be bullish. And up here, there's your 1,000 on a weekly chart, which is even more decades. And then the 200. Lower value range. Big gap. And here you see, I don't know, I didn't even see if that was a buy signal when I looked at it, but there it is on the weekly chart, right? We like those signals that we get off of the weeklies and even the longer time frames, because they, at the very least, might end up being a decent trade, but if they actually turn out to be trend moves or more cyclical in nature, breaking through decades of compressed time, that might even work out much better. But in the meantime, we just trade what's in front of us. But I think you can see there's a lot of targets that you can look to the upside, but don't forget that it can look like this on the daily for a very long period of time, where you just struggle. So we will see where where this takes us. But it's nice to see some upward momentum after being ground down and then pushed sideways for a while, like it didn't even matter. So it's good to see price above the 50. It's good to see price above the 20. It's nice to see this opportunity that was created by all this downside selling. And part of the reason I want to show you this is because you're going to see this a lot throughout your life doing this. Big moves down that really just kill the vibe. Understand that what kills the vibe one day creates it the next. Right? So when you see this, because you're focused on chart monetization, you're likely going to be on the right side of moves like this, and if you're not, you're going to know to get out when you need to. And you also understand that these big moves to the downside will create opportunities to the upside moving forward. And in reverse too, right? So don't be discouraged when this happens to you, because it's going to create something like this. And, you know, all you have to do is have the tools in your toolbox to monetize what you see on the chart, because you understand what you see on the chart. You know, taking off the volume profile, we lose context really quick, because we don't see where price has been and has not been. This is XRP, and this is the daily. And you can finally see a little bit of movement, and it's actually good to see, and I think we talked about this late last week, this support level here. Move up, resistance, move down, catch some support at the 20 and the 50 and start to print a green candle. That's that's the stuff you want to see. What's it look like on the 4 hour? So it's really, you can see the gap that you created to the upside, right? So we really want to be careful we don't fall into it to the downside, but if you're long from here. But you're getting the support you need. You really want to break through that 210 level that we broke through there, because you can, or that we put on there, because you can see it's structural, and there's your 20, or sorry, your 50 and your 500. That's your target. This just could be a little bit of retest of the T line and the 20, and you bounce and head for that range at 215. Where's 215? Basically right in here. So that 215 that we identified on the 4 hour is right in this area here. So you have to break the 500 to get into it on the daily. So if you're looking at this chart trying to figure out what to do, if you were to enter long here, you would have to understand, if you're looking at that 4 hour, that you could see a little bit of resistance up here, and if you did, maybe a pullback again. So you want to make sure this does break through. This is going to be the benefit of getting a signal, right? So that we don't have to figure it out. It'll figure it out for us when enough money moves in to give us that signal. That's the value of it. Basically, right now, we don't know what comes next, but this just could be the time where we pay a little bit of insurance to make sure that we get on the right train at the right time and go to the right place. This is not where you want to get on the wrong train at the wrong time. So we want to make, the little bit of insurance you pay to make sure that you're on the right side. And this is what I mean when I say a safe, profitable entry. That's kind of what I'm getting at. I wanted to show you, you remember this chart, guys? That we used to use to draw these levels out? And I'm going to condense it just for a second. Like, we started drawing them as price was moving up into this level, we started dropping these white horizontal lines. And it's all we were trying to do at that time was to demonstrate that these lines of support and resistance or structure that we established many months before, how they become relevant later on. Now, I'm not saying I'll leave this stuff on your chart all the time, but I had left this chart like this, and I happened to see it today, and I was like, oh my gosh, I forgot that we were using this chart to illustrate. And when I looked at it, isn't it remarkable? Look where we're finding the resistance. When I talk about current price revisiting past, I can't think of a better illustration. All of this structural support and resistance level is still relevant today. And we started laying it down in 24, November 24. And here we are in January 26. Lo and behold, like this level is relevant to the penny. And if you look, throughout this chart, you'll see, like, look down here, like all of these levels are remarkably respectful. But this is a really great illustration of how current price looks and respects past price. I know it looks a little busy here, but I just left it as it was the last time we touched it. So here we are, just waiting to see, what comes next. But I think it's real interesting to see how you revisit these areas. So if you were thinking, oh, it just sounds nice, no, it actually really does happen. It really does happen. Let's look at, this is the NAS 100 weekly chart. Now I'm going to go to the daily, because I had just dropped this level on here, and we've talked about this. When I can connect that first lower high, I just want to just kind of mark it, just for my own interest. And there are times when it is just very much respected. It is not unusual to see price bob up above it a little bit and then come back within it. We'll see if this turns out to be, a breakout move. I'm not hanging my hat on this trend line. Like I said, I just like to, when I see that lower high, I just tag it. We'll see if we come back into this. Maybe we're not going higher. We're going to find out. We're really going to find out. But I just, look at all this range. I'm not saying we're going to come all the way back all in one day or anything like that, but there is a significant bullishness that really hasn't been effectively retraced. And at some point in time, it will. Might not be today, tomorrow, next month, next 6 months, but at some point in time, all these things do find a way, for whatever reason, to retest themselves. All the things that you think can't happen all of a sudden do happen. And usually it's not pleasant when you find them. Let's look at SPX really quick. This is the daily chart. Bullish chart, yeah. So far this is just a red candle in what has proven to be an uptrend after getting some support here at the 20 as well. That's your upper value range. That's where you seem to be finding a little bit of resistance, and now you've got these two equal tops. So we'll see what this does. You know that coming back to the 5 EMA like it did here is completely normal. Coming back to the T-line is completely normal. Break those levels, however, and then you're into another test of the 20 EMA. And have you tested it before? Yes. It's not the first time you've seen it. So there's a higher probability that it might give way. And if it does, it comes back to the 50. Not all in one candle, it's a process. But has price seen the 50 before in this move? Yes. And the same can be said here for the 100 with this big impulse down from last year. Same, basically November of last year. All of this has been tagged. at least once. So I'm really interested to see, because we're kind of showing toppy signs, how this plays out. There's the point of control even, which is significantly lower than even the 100 MA. So the 200 is the only one that hasn't been tagged in this whole move from down here. So this is going to be interesting to see how this unfolds. And if the support shows up where it shows up, because that'll tell us a lot. Let's look at the Qs really quick, although flat today. Let's look at the weekly. Same kind of thing. A little sideways choppy in here. There's your tag. Bounce off the 200 and price goes higher. We're looking to take out these highs, right? We haven't really taken this out yet, and we obviously haven't taken that. But that's what's going on here. This is still a bullish chart. Even these 3 weeks didn't pull the 5 down for a trend change. It didn't do it. So it's still bullish. And don't try and rationalize why. Right? Because all I can tell you is that if you were short in here, you're dead. If you were long in here, also dead. If you're on the right side, your life's going to be okay. If you're on the wrong side, probably not. And you have the ability now to read not only price, but trend. And when you put those two things together, it's an incredibly powerful tool. For some reason, these privacy coins are taking off all at the same time within reason. Anyways, so there was XRP we showed. This is Xano, and it had, look at this ridiculous move down. Struggle again with the 500 MA, but you get this green candle with a signal at a major moving average. The following candle blasts through 2 significant levels of resistance. So for some reason, the privacy coins are bouncing. Holy smokes. This is Pirate Chain. Wow. Okay, so what is this? Which day is this? The 12th. Let's go to the 4 hour. Let's see. So, this is why I like the 4 hour chart. So here you go. This is the lower value range. This is Pirate Chain. And you get a little bit of basing in here. And then all of a sudden you get a green buy signal on the 4 hour. Even with all these wicks, notice how, that's not a wick, but notice how price doesn't change trend, right? Like the divergence between the T line and 5 EMA stays completely intact to the upside. So the 4 hour chart gets you in the day before, gets you in here on this candle the day before. Does that have value? Yeah. Did you know we didn't know what was going to come after this candle on the daily chart? Massive green candle. You had no way of knowing that. And then another one. Who knows what tomorrow's going to bring? But for some reason, with the exception of Zcash, obviously today's having a bit of a problem, but I mean, it had its run too, didn't it? And we've looked at Zcash, obviously. Point of control. Notice the failure at the point of control. Here's your confirmation, however. So this is the market trying to figure out what it wants to do. This is the insurance you're paying to make sure that you're on the right side of this trade. And look, price breaks down. You have this kind of impulse momentum down, breaking a major level. Price tests the 5 and fails. Same here. Hasn't even tested the T line. Now it's has that 100 MA as resistance. This is still a bearish chart. And if this turns out to be the failed breakout, like we see all the time, yeah, price moves down, attempts to break out and fails, rolls over, takes out the previous wave's low, and if it doesn't find support there, it continues to break down and looks for other levels of support that will show up in structural areas, major moving averages, liquidity ranges, and all that fun stuff. Look at this volume gap. So we know, it's kind of hard for us to look back at the same time, but we know that north and south of the POC, because that's kind of the average equator of that volume, right? North and south of that is a gap. So we know that to the south of here, there's a gap which price could fall into. And that's what this has done. Right? There it is. There's the gap. There's the north side of the POC has a gap to the upside. The south side of the POC has a gap to the downside. And what happened? You broke one level, as in the 20, and you found the next level, and you didn't hold it. So what happens? You found the next level, and you didn't hold that. So based on how this nursery rhyme typically goes, we're still looking for the next level down. And we've shown this before. This 200 MA is going to creep into this area in here, and then we can have time and price find them, find each other. And the only thing that changes this is a ton of money coming in. Can we find a way that maybe we can look inside that candle to see? Sure, just drop down to the 4 hour. And you're seeing on the 4 hour that you broke the 20. This whole candle kicked off a sell signal. Do you think you probably want to come back on this time frame and at least remember the failed breakout scenario, right? So there's your previous wave's low. Failed breakout, come back. Here's your low. So yeah, you're going to want to come back to that lower value range. And if you don't catch some love in there, well, you just keep looking to your left and for other areas where there's support. And if you don't find them, you just keep looking back for different time frames to find a target. Here again on the 1 hour, you can still see that price is bearish to the downside, has broken major moving averages, breaking one level, finding the next. It's looking for the next level down, and this would be a logical place for it to look too. So there's your price moving higher. There's your failed breakout. You came back, took out this low, which in this case on this time frame is also structural, and now you're looking for the next low, probably in here. Now, you don't need a big truck to carry around these tools, right? You don't need 1,000 different things to figure out what might happen next. You just don't. You need a reliable strategy, a reliable methodology and system that mitigates risk and provides you with the greatest opportunity to monetize the chart in the safest manner possible. I want to draw your attention to the Aster chart. And when our friend Rico looks at this, we'll laugh, because here's your lower value range. This is the 4 hour, right? So what do we talk about all the time? We talk about how we want to find good entries onto the daily. This thing is completely melted. There's not a lot of trading history here. So the 4 hours actually quite useful. But everyone this is kind of the discussion between the narrative and then what you see on the chart. The narrative was greatest thing since sliced bread. The price on the chart told a different story. And you can kind of see what we're talking about. The thing just, at every opportunity, it thought it was, wanted to break out. It just showed you it couldn't. And quite often in this crypto space, we see this where the coolest thing since sliced bread doesn't perform, and then all of a sudden, for whatever reason, decides to perform. And there's a whole bunch of conversations we can have in between those 2 points. But at the end of the day, if we're focusing on just monitoring the chart and understanding that we need to be on the right side of the trend, this thing wasn't giving you a lot of reason to buy it. Okay, here's your failed breakout, and you came back to these lows. But we all know that eventually this thing was going to break out. We've talked about it many times. And what's this? I give the same answer every single time. Look to the 4-hour chart. If you can find an entry onto the 4-hour, look at all of this is the lower value range, and you're going to be looking at this 4-hour chart all the time. Right? This isn't going to be an unfamiliar look to you if this is one of the handful of things you're going to chart and trade. First touch of the 200 was rejected. And, it did the flowers and chocolate test fail thing. Here's your first test of the 50 on the 4-hour anyways, that fails. Price comes back to a place it's been before and has had a lot of support. Like, the market really didn't let it fall much lower than there. 4-hour entry signal. Going in, that's going to be resistance. That 100, and look, to the penny, it tags it and starts to pull back, so you understand what's going on, right? You knew it was going to be resistance. There's your 50, you understand that as well. You understand those gaps are your opportunity. And hopefully you want to get up there to the 200. You go back to the daily, you don't have a buy signal yet, but you do on the 4-hour. So if you were to if you would have taken your 4-hour buy signal, probably would have got you on yesterday or earlier, much earlier today. And how are you going to do that? How am I going to know? Well, you're going to set an alert, like we've talked about a million times, for the 4-hour, so that you get woken up in the middle of the night by a trio of alerts on your phone and your computer and God knows where else. So you're going to get those alerts. And you know what? Not everyone you're going to want to take, but I think this one you probably would. So you've taken that 4-hour long, and now you're hoping that it shows up on this daily chart, and you're hoping that this is the bottom. And if this is the bottom, did you get any sort of value out of what we've talked about? Yeah. First off, you're able to find as close to a bottom as possible, although that's not the job. But getting a great entry long on a 4-hour chart that you've been waiting to long with some meaning for a while because you believed that, for whatever reason, is your rationale, the price was going to spike higher, take out these highs and move on, and before you know it, it's a $10, $15, $20 item. I don't know. We're just using this as an example. But the 4-hour chart was always going to be your entry onto this daily. Worst case scenario, you get stopped out. Good scenario, you have a decent trade. Best case scenario, it's the bottom and it runs. And then from there, you can figure out what to do with it. I don't think that's going to be a problem you're going to be afraid to have. But allow yourself to get into the position to have it, right? And if you blow yourself up all the time, that opportunity just doesn't ever seem to come. And so what we're doing here is meant to be as simple, straightforward as possible. Don't have too many things that you're following because it just becomes, analysis paralysis. Have 5, maybe 6 tickers that you want to either trade or potentially trade and chart them religiously. Understand what's on all those time frames. You shouldn't have to look at the chart if someone was to ask you, approximately what's going on with XYZ on the 4-hour. You'll know. And you're without being, by not being focused on too many things, you're going to be doing the right things in the right places, and then you're going to be in the right place at the right time. You really will. And patience. I know nobody wants to hear it, but patience is key. When we started to kind of recover from this big move down, I almost felt it was like a duty to explain to people that this is going to be a while, right? Because don't get overly excited. The next big candle isn't going to the moon. Right? Just relax. It's a process. It's not instant. This could still fail, right? And I don't like the kind of diving resistance, but hopefully you break through this level, get into this gap, and we can start having a different conversation. But these pullbacks create opportunity for you. I know if you're long, it's discouraging when you see a chart like this because you so desperately want to trade. Just understand that there's no success in trying to long those red candles. So don't try. And don't think that by dropping the time frame down to the 5 minute that you're going to do yourself a favor. You're not. You're still catching a falling knife. You're just doing it on a shorter time frame. That's all. Like, don't force it. Let the market come to you. And if you're only comfortable trading long, or that's your modus operandi, and there's nothing but days and weeks of downward momentum, then you're going to have to find another hobby or learn how to trade short, which a lot of people find intimidating, but you know what? It really is no different than anything else. It's just a chart. And your job is just to monetize those opportunities. That's all. And we're just trying to show you, go back to Apple's chart here, some very simple ways to do that. Daily sell signal. Fine. Short it. You don't have, like everyone's like, I never short Apple, and I get all that. We're just using this chart as an example, but there's your sell signal. Would you have had a successful trade if you would have shorted it? Sure. Probably. Is it still bearish? Yeah. Absolutely. Hasn't reversed yet. Can't break these levels that we talk about all the time. Doesn't matter what it is, if it's oil, if it's a stock, or if it's crypto. There's United Health yet again. Now, a lot of this, my hope is that for all of you, is that these things become instinctive. And for example, you're going to see this 200 MA not being tagged. And, my hope is that instantly you see that and you're like, okay, this is either break into bull zone for a significant run because it hasn't seen it in a long time, or it fails. Right? First touch. Also at the upper value range, which is telling you that's a premium. And there's not a lot of volume up there. Get up there and price will shoot high fast for sure. But this is resistance. Full stop. There you go. There's our sell signal on the 4 hour. And it's come right back to, oh, lo and behold, that crazy anchored VWAP. That's what it's sitting on. Fail it, you're back down here again. Right? So do what the chart says and know these rules, right? Instinctively, you're going to see a setup like that and you're going to go, that thing hasn't seen the 200 MA in a coon's age. What to do. Depending on the time frame and style of trading you have, that might be for a few days, a week, a day. Or, it's a longer put maybe, I don't know. But you see resistance at the 200, the very first touch, you pay attention to that. You're more prepared to see it fail than to see it go through. And if it does go through, well then obviously there's a lot of bullishness around that. But the initial first touch typically fails. Right? I'm not saying short it every single time. I'm saying identify it instantly by sight. You can just look at your screen from 20 feet away and see that setup. And you'll know what to start looking at. Am I oversold? Am I overbought? Where's the drop for price? And so on and so on. And with that instinct will come confidence and vice versa. And I think and I'm hoping that by using this tool, we can help make that a little easier, the whole process. Take a nice buy signal off, consolidation, price goes crazy. That starts to roll over, you get a lot of selling, price goes down. Like, it's just find a time frame that you like to trade and trade it. It's not that hard. Here's BW, Babcock Wilcox. We've talked about this before. This is one of those stocks that people probably weren't even sure if it was alive or not. There's a better example. And a lot of stuff happened here. It basically went away and was reborn. And then all of a sudden, for whatever reason, price is going higher. This is the weekly. This is a weekly buy signal back in June of this year, of 25 rather. It's hard to blow this chart up because it's been so flat for so long. But June, you get a buy signal in, price starts slowly creeping up and then explodes. Looks like this on the daily. Right, so this is why I'd be, really glad to see a lot of you pay attention to those weekly charts. Because that's how you're going to get that, oh my gosh, I can't believe it went up that much kind of days. Find the signal. Here's a beautiful buy signal on BNB. Right? Like, grab yourself a BYDFI account if you don't have one. The link is in the YouTube description. It's on X. It's a great platform. Really slick. Very user-friendly. There's a buy signal. You could have bought that on October 29th, and it would still be running. Would it be logical to think that as price was pulling back here from the top, that it would target the point of control? No. Why? Because current price looks for past in the event of an up or down trend. And when it doesn't find support, it keeps looking for the next level. The point of control and the 200 MA were tangled together. Lo and behold, where did price hammer? Right in that range. It's not rocket science, right? It really isn't. Here's that weekly. Same chart. There's that range on the weekly. That 839 range. Buyers pushing. See those wicks at the bottom? That's buyers pushing price higher. And so far, on the way down, you're able to stay out of this gap, getting support in and around the 50. And look how, see this purple line here? I hope you can see that. That is the anchored VWAP for volume. Look how price just continues to tag it and just chatter along it. This is kind of one of the reasons, again, why I like the anchored VWAP on TrendSpider. So that now, in the combination with being able to use our signal system, is very helpful, because I really like these anchored VWAPs. And here you are. Look at this candle. Perhaps it prints a buy signal for you, and then you're testing the 20 again. It's the same process over and over and over again. Right? Now, I'm sorry if it's repetitive and boring, but that's what it is, right? The idea is to demonstrate how this works, to help you understand the rules, how the market speaks to us, so that you can monetize the chart yourself. And when you're doing that, it's a heck of a lot of fun. And what makes it more fun is all the time is that it's not hard to do, right? Keep it simple and just look at the chart. Great. This is a huge opportunity on Solana, I think. If you break through this level, stay bullish. There's your downside risk, but I mean, you like to see shorter term averages crossing up through the longer ones, right? That's an indication of bullishness, and that's what you're seeing right here. No, it's not a golden cross or anything like that, but I mean, it's a bullish signal when you see shorter term crossing up through longer term, and then bearish when it's the other way around. Break through the structural level into this gap, and I think you're going to have a lot of fun. And guys, if there's any questions, just shout them out today. Everyone's quiet. Let's look at ETH. Where is it? Here it is.
I'm going to chime in. Okay.
Uh-oh.
So you showed some really good charts, right? Solana, Ethereum, went over some others, right? So if you do take a look right there, you're having more of these show confirmed uptrends, right? Using not just your moving averages, right, but even your volume weighted average price. You're seeing your active volume profile, if you want to call it that, right? So your shelves building up as well. So just to add that in, if we look at that, even on a relative basis, if you want to look for relative performance, right, respectively, like, hey, should I be more in this area or that area as well? Just to add to it.
Yeah. Well, I haven't looked at ETH actually in a little bit, but here's a nice big green candle that's printing a daily buy signal at the lower value range. Really wants to work into this gap to the right. You can see this. This is kind of a structural level in here, and I'm sure it wants to break through that, making that likely if it can get into that gap. There's your 200, obviously a draw for price, and there's the VWAP. The white, and again the anchored VWAP for price up here. So there's opportunities on these charts. Then like you're starting to see it with some consistency with several different tickers, right? So there's something going on with the privacy ones though. That's kind of wild. There's something else I wanted to show you here. Microsoft. Thank you. Microsoft is one of those, older technology companies that's still relevant. But this daily chart really started to look strange up here. And, I haven't seen Batman ears like that in quite some time. And David Elliott used to talk about the Batman ears being bad, and I think this is an example of the Batman ears in full display. And price just broke everything on Microsoft's daily. The upper value range for the volume profile, it broke through the anchored VWAPs, the 20, the 50, the POC, straight back to the 200, right? And you can see a little support from the 200 red, bounce, gets to the 20, fails, comes back to the 200, bounces again. This is testing the VWAP for volume, fails. Now you break the 200. Now that 200 is now resistance. So, and then this big gap to the right to the downside. Of course, that's the lower value range, 500 MA, 1000 MA. But when you look at the weekly, this thing's hanging on like for dear life. There's that kind of funky little double top thing on the weekly that we saw on the daily. There's your confirmed sell. You break the 20. Again, look how price gravitates to the anchored VWAP. However, the trend was still down, right? The divergence between that T-line and 5 EMA stuck, and price is continuously moving down. Now it's supported today on this time frame on the weekly at the 50, but is there still the divergence down telling us the trend is still intact? Yeah. And there's the anchored VWAP for price. So there's a slippery slope here on this thing. And you look at Google as an example, and this thing's gone, or that's not Google, that's Google. It's gone in a complete total other direction. Now, I'm going to bring you back again. If you're just trading the daily chart as your, that's the weekly, I'm sorry. Here's the daily, if you're just trading these daily charts, there's a massive difference between what you see on Google's chart and then the previous chart. Right? A massive difference. Buy that weekly signal. You only want to go long, that's fine. Here's a weekly signal for you to buy. Back in May of 25. Send me an email when the trend changes. And I still haven't heard from you. But yet, there was so much drama in and out all the time. Every day. Like, honestly, if you could listen to 100 different people speak and have 100 different opinions on what's coming next, and they all sound completely rational and reasonable and thought out and supported. But it's only price and trend that matter. And price and trend on this thing is going in the complete opposite direction of Microsoft. I have no idea why, and I don't really care. The only thing I care about is, did I find this trade, and am I on the right side of this trade, and can I manage this trade? The answer is yes. And so can you. All of you. And don't let anyone tell you that you can't, because you can. USD, JPY. This is the weekly. I'm sure you like this chart, KP. Where did price consistently find support? Right along the VWAP. And is this still bullish? Yep. All that divergence is telling you that the trend is still intact to the upside. And as price was working through this move, kind of checking off highs within it, now that it's taken all of those, what's it looking for? It's looking, now you look to the left, and now it's looking to take out these highs, which it looks like it has, or is in the process of doing. And if it still maintains its bullishness, it'll look to the left to the next high. And that's how you're going to establish those other targets. But you have to have somewhere to look. If you don't have targets set and, preset to check yourself out, you're never going to be able to take your money when you're supposed to take it or when you need to take it. Because then you'll do stupid stuff. Cleveland Cliffs, still a bullish chart. What do you think price wants? Notice what happened at the 200 MA. I didn't rehearse this, by the way. Rejection. Is that the first touch since it broke it to the downside? Let me check. Yeah. Remember we talked about instinctively looking on the chart for certain things and expectations? Here it is on a steel company. First touch of the 200 failed. Your job is to monetize the chart. You could have been short all through here. This was a pretty significant movement down. There's a very definitive channel to the downside. You base out at the lower value range. You get a buy signal and you take it. And as soon as you tag that 200 in a wick and start to pull back, for me, I'm out. I'm done. Right? And probably reversed and gone the other way by that point. But this is how you monetize the chart. You took your signal, you broke through the necessary resistance on the way up. You were in full command of the trend. You recognize that first touches often fail, have a high probability of failure, and lo and behold, you would have seen this, you would have been right, and quite honestly, you would have checked yourself out and closed your long. Now, knowing that this is a test and fail scenario, are you already looking forward to the retest of the 200? Probably. So instantly I'm already gearing up to see what's shaping up to give me that retest of the 200. And in this case, you can see the hard fail of the 200, and it brought you all the way back to the 50 within 2 candles. Right, so that's a pretty significant move to the downside, and it bounces right at the 50. Was it the first touch of the 50 since it broke through it? Yes. Higher probability of bouncing in this case, and that's what it did. Now, we're looking to break through that VWAP again and take another run at that 200. So if the trade that you always want to make is long, all right, you're respecting the pullback. That retracement creates opportunities. Here's your confirmation coming at, lo and behold, the anchored VWAP for volume. You can see the respect you get there as well. And then there's your buy signal. You're like, okay, I'm in again. You take the buy signal. The divergence opens up, get a little hot here, create that kind of knuckle, but it usually maintains its bullishness. It does. What do you think you're looking for? These areas. So I'd be excited after this pullback. These pullbacks create opportunities for you. Remember that. Don't be discouraged when you see the red candles. Just be prepared to monetize to the other direction when the time comes. But if the overall trend is down, let's use this as an example, know your longs are going to be short-lived. So if you're only making long trades in a bearish market, there'll be fewer of them and they won't last as long. But this is an example. If you're making those long trades, nice pullback, right back to the 50, bouncing, getting a buy signal, which is your confirmation. And now you're just in the driver's seat and you know what your targets are. I'm hoping that, you get here and you break through. And then you start looking to the left of the chart. Here you go, upper value range. You can see where price wants to go. It's just the ebb and flow of money. Right? The ebb and flow of money. If you are interested in these anchored VWAPs, I highly suggest that you try them. I absolutely love them. Head over to trendspider.com and I believe you can still get a trial, so you can give it TrendSpider a bit of a whirl and throw those anchored VWAPs on your chart and just start to get an idea of how accurate they really are to help you find levels of support and resistance that maybe you didn't see before. If you decide you like TrendSpider, when you sign up, just use the code BL25, and that's going to save you another 25% off your invoices. So that's BL25 at trendspider.com to give it a shot. And in the very near future, I'm going to upload or publish rather and make available our script that we use that produces these signals for us, so that we can now use our system on TrendSpider as well. This script does not have all of the moving averages and the volume profile, just because TrendSpider's platform and what you get for your subscription is a little bit different, and you won't have an issue using all of those indicators anyways. But what you're getting is the ability to use this script just like we always do on our TradingView charts, but now available on TrendSpider as well. So I'm kind of excited about that, as you can tell. I don't know if there's any other questions. Let's look at NVIDIA really quick, because this thing is a slippery slope. This is the weekly chart, and let's pay attention to what we see here. Anchored VWAP for volume, anchored VWAP for price, and obviously our volume profile. That's the POC down here, and the lower value range, that's the VWAP. If this weekly starts to break down, can we see potential areas that would create opportunity to the downside? Yeah. There's your gap. The bottom of that gap is lining up nicely with the anchored VWAP. Throw on a little context. There's the 20. There's the 50, there's the 200. The 50 right in the middle of that gap. So if we do start printing a sell signal here on the weekly chart, you're going to look at for price to, if this is a failed breakout, take out the previous wave's lows. And if it doesn't get support, it does fall into that gap and finds the 50. And that's how you get there. Alternatively, you get support at the 20. This is a simple continuation. Price moves higher, takes out these highs, and then looks for the next level up. Right? We can only trade what's in front of us. That's it. Right? I wish it was different, but that's all we can do is just trade what's in front of us, and what we think and what we feel doesn't matter. Right? It's only what price does and the trend tells us that matters. Our opinion doesn't matter. It just doesn't. You could have woken up this morning and said, I hate ETH, I think it's going to go to 0. And then you'd print this candle. Doesn't matter what you think. The only thing that matters is that you can find the opportunities to allow for the greatest monetization on the chart in the safest way. And I think that's kind of what we're doing, I think. We're showing you where you can take advantage of price movements of significance with as little risk as possible by getting you in these trades at the right time. All right. So I really appreciate everybody stopping in today. Head over to BYDFI if you don't have an account there. You can use the link that's in the X profile. I believe it might be a shortened link for the need of space, but if not, if you just want to go to the site and enter the code, it's capital K, 5, capital Z, 4, capital T, lowercase p. And that'll get you on BYDFI and take advantage of a lot of the bonuses that are available for the new users. So you're really going to like the exchange. It is slick and fast and clean and very easy to navigate. So I appreciate you guys stopping in today. We will see you on Thursday to do this all over again. And check out trendspider.com. BL25 is your code. And you'll be able to use this script over there as well. So thanks, everybody. We will see you on Thursday, and have a